Hey, this is Jeff Rose, GoodFinancialSense.com. Are you a small business owner that wants to set up a retirement plan for their business but just has no clue on which is the right one for them? If you are, don't worry, I was in that exact same situation. Today I want to talk about the Sep Ira, what it is. I want to tell you some of the benefits of how it might be a good fit for your business, and also when a Sep Ira might not make the most sense for you and your setup. First of all, what is a Sep Ira? Sep Ira stands for Simplified Employee Pension. It's a lot of words, but basically it's a retirement plan that is set up specifically for small business owners. It allows you to put in a lot more than you can in your traditional or Roth IRAs, and that's where we start with the first benefit. So some of the benefits of the Sep Ira, is like I just mentioned, is that you can put in up to $49,000 per year into it. Obviously, that far exceeds the $5,000 or $6,000 that you could do into a traditional Roth IRA. So $49,000 is a big chunk of change to be able to deposit into 1 year. How does that calculation work though? Here's where it gets a little bit tricky. If you're an S corporation or a C corporation, or if you're an LLC that's going to be taxed as a corporation, then you can do 25% of your W-2 wages. So whatever income that you decide to pay yourself out of your corporation, you would then take 25% of that, and that then determines how much you can put into the Sep Ira. So be able to put the full $49,000 into a SEP for any given year, as you can see, you have to have a pretty handsome wage or income to be able to do so. If you're a sole proprietor, like I have been, then instead of taking 25% of your wages, you take 20% of your net income. And that's how you determine how much you can put into it. But as you can see, even though we're only taking percentages of wages or net income, the amount that you can put in far exceeds what you can do in a traditional Roth IRA, and also the simple IRA, which is, I would call the stepchild of the Sep IRA. One of the other benefits of setting up a Sep IRA for your business is just that they're easy to set up. Compared to setting up a traditional 401k or even a solo 401k, there's a lot more IRS documentation, most commonly known as the IRS Form 5500, that you have to file each and every year when you set up a solo 401k or traditional 401k. With a Sep IRA, it is not an ERISA ran plan, so therefore there is no extra IRS documentation. It really is just a simple form that you fill out and then you're good to go. Another benefit of setting up the Sep IRA is that it's very, very inexpensive to set up. Most solo 401ks or traditional 401ks, you're going to have a setup cost, and it differs with all the different carriers, but let's say on the low end, $150. I've seen some on the higher end of up to $800, sometimes up to $1,500. But with the Sep IRA, there is no setup cost. Typically, the ongoing fee that you pay is the Ira Custodial Fee that you'll pay with the brokerage firm. And this can be as low as $40, on the high side, maybe in the $75 range, depending on where you go. Obviously, if you use an online provider, it most likely is going to be a little bit cheaper than that. But nonetheless, since you don't have to file those extra forms with the IRS, the annual maintenance of that Sep IRA is very, very inexpensive. Now, one of the benefits that I personally love about the Sep IRA is that you aren't bound to the same deadlines of putting your money in like you are a traditional Roth IRA. As most of you know, you have typically until April 15th of the following year to put in your contributions of your IRAs. So for next year, for example, you have until April 15th to max out your IRA. With the Sep IRA, you don't have until the April 15th. You actually can file an extension for your business, and then you have until October 15th of that year to make the contribution for the previous year. So let me give you a personal example. Every year with my business, I always file an extension because I like to see where I'm going to be at income-wise. If I think that I'm going to be at a higher income level the following year, so instead of putting a big chunk in for the previous year, I'm going to put in less last year and more in this year, so I save more on income tax. And no other retirement plan have I had to where I have that ability to see where I'm going to be at income-wise, because you figure by October 15th of the following year, you know where you're going to be at income, for the year. So that gives you enough time to gauge to see what's going to make the most sense for you and your business. Now that I talked about a lot of the benefits of a SEP IRA, let me give you a few examples of when a SEP IRA might not make as much sense for you. In one area that the SEP IRA might not make sense is if you want to be able to put more money in without being subject to that calculation we talked about earlier. In that case, that's where a solo 401k might make the most sense. Because with a solo 401k, you do have those numbers you have to figure, but before you do any calculations, you can immediately deposit the $16,500 into the solo 401k. So that is an added advantage of the solo 401k versus the SEP IRA. And I will tell you that is something that I'm looking at personally for the next tax year. And lastly, another situation that a SEP IRA might not make sense is if you have several employees. Why, you ask? Because whatever percentage that you decide upon, so let's say that you've decided that you want to put 15% of your net income into your SEP IRA. Whatever percentage that you decide for yourself, you have to do the exact same percentage for your employees based off their income. So if you have one key employee, it might not make that big a difference, but if you have 5 or 6 employees and you're having to put 15% of each of their income into their retirement plan, then it's immediately vested. So that means that once you put it in their account, it's theirs. There is no taking it back. That might take some careful thought and planning to see if those employees are right to be able to receive such a large chunk. Now, you can legally discriminate on some of those employees. Some of the factors are if they're under the age of 21, if they only work so many hours a year, and if they haven't been with your company for a certain period of time. Be sure to check the blog for some more of those restrictions to see if they apply to you. But nonetheless, it's still something that you want to consider before you start implementing a SEP IRA for your business. I hope this was helpful in determining if a SEP IRA was right for you and your business. If you have more questions, please feel free to visit me at the blog at goodfinancialsense.com. And if you're on Facebook, be sure to check out our Facebook page and give us the big thumb. Love to see you around there. This is Jeff Rhodes, Good Financial Sense. We'll see you again.